Silver is on the verge of a breakout, according to several experts in the precious metals space. They feel very positively about the metal. I'm going to tell you what I think as well as we explore. It is fascinating to see what people are saying about silver these days, as it has done quite well over the past couple of years, and we've seen some pullbacks, and there's been some frustrations for many of us in this community. Notwithstanding, there are experts who think that it's going to go up. I'm talking about potentially $200. Let's get into what they're saying in this piece here from Dean Belder. There is 3 experts that have been interviewed about this, and we've seen that silver has lagged behind gold's record run, causing the gold-to-silver ratio to stretch near historic extremes. But with the gold price buoyed by central bank buying and silver increasingly tied to industrial demand, the disconnect between the two traditional safe haven metals has widened, and that provides an opportunity, I think. Even I believe that the gold-to-silver ratio is wider than it should be. So that means that if you are really low on silver compared to gold, it may not be a bad time to consider making a purchase. But of course, you have to do your own diligence and homework and understand that even the expert opinions, they're not your financial advisor. Decisions you make should be yours and yours alone. But as you shop around, check out Summit Metals. They are really growing, and not only in terms of their product selection, but their service as well. So check out summitmetals.com. They have competitive pricing and great products over there. Elevate your wealth with Summit Metals. But now the question remains, could the silver price finally be poised for a breakout? Now, my thought is that we've already started to see it. It may not be an extreme breakout, and there are certain numbers that have got to be held in order for that to happen, according to others, especially the technical analysts. But during a recent silver-focused webinar, Sprott founder Eric Sprott, former Hecla Mining CEO Phil Baker, and technical analyst Michael Oliver joined an interview with the Arlington Group to unpack what's driving silver's sluggish performance and whether a reversal could be on the horizon. The panelists explored silver shifting applications, the impact of macro forces like Bitcoin speculation, and why some investors see today's dynamics as a potential launch pad for silver's next big move. Yes, indeed. It is quite something to see how silver has risen over the past couple of years here, especially the last 18 months. The silver price surged last year in 2024, rising from around $22 per ounce at the start of the year to roughly $35 an ounce by the end of October. In fact, it was 9 cents shy of that. I remember that specifically. Since then, silver has largely stayed between $30 and $32. Of course, right now, it is above $33, at least as I record this video. It did briefly break above $34 back in March. The metal has seen some support in 2025 due to instability in global financial markets caused by Donald Trump's tariffs and the threat of reciprocal import fees against key trading partners. And these key foreign policy shifts in the world, the largest economy, have created uncertainty for investors who have been increasingly looking for traditional safe havens like silver and gold to de-risk their portfolios. Today's tariff turmoil overshadows a fundamental shift in the silver market over the past several years, which has seen industrial demand growth start to outpace traditional investment demand. The most notable demand increase has been due to energy transition and silver's use in solar panels. While firms like Goldman Sachs have predicted the industrial demand will wane over the next few years, panelists presented different points of view. Sprott said there would be further demand from the electric vehicle market as producers look to solid-state batteries. And I covered the story about that. That's from Samsung, and they're going to be developing silver solid-state batteries, which are not only safer but also quicker to charge. I think solid-state batteries will bring EVs to being viewed as economic, he said. Plus, the whole processing of solar panels and generating electricity more and more expensively over time. It's just going to make the demand for silver continue to rise here when we already have a shortfall. Baker pointed out that solar currently makes up 29% of silver's 1.2 billion ounces of annual demand, and it noted that if it were to disappear, it would have a massive impact on the silver market. However, he also said that even if it were to have a significant policy shift in the U.S., there would still be considerable demand for solar worldwide. Even in the U.S., the policy really is an all-of-the-above approach for energy. I'm not concerned about solar cells diminishing. Could they go flat? Yes, that's fine. Flat at 300 million ounces? That's great demand for silver, he said. While most solar demand comes from China, the panelists also discussed India's growing role in the sector. The country has recently been working to increase domestic production of solar panels. Prime Minister Narendra Modi made a policy decision about a year ago to grow the solar industry in India. So, in that country, only about 10% of their demand for silver is used for industrial purposes. In China, it's 90%. And so what you're going to have in India is you're going to see their solar panel growth skyrocket, according to Baker. Now, I don't know that he can necessarily make that big of a plunge or leap that quickly, but it is possible. Demand isn't the only factor influencing the silver industry. Supply constraints have helped push the market into a structural deficit over the past several years. Silver is primarily a byproduct metal in the production of copper, nickel, zinc, and gold, which makes it highly dependent on dynamics in those markets. As Baker pointed out, silver isn't a significant source of revenue. In fact, it's a whole lot cheaper to mine as a byproduct of other metals. The all-in sustaining cost is pennies to the dollar compared to what it is to mine as a primary resource. And those are few and far between these days. So even if the price of silver rises significantly, they're not going to change their operations because it's not going to matter for a big copper producer unless there are dramatic production swings for those commodities. Supply and demand are unlikely to come into balance in the near term. So that's the background as to why they think it's going to break out. And I agree with most of that there, but they say that over the past year, silver has tested $35 twice. Using technical analysis, Oliver compared this to how the silver price tested resistance at the $26 level 3 times before breaking through. So what technical analysis really does is analyze patterns. And what he's seeing is momentum indicators now is similar to what happened at that time. In the lead up, momentum has gone flat, but once silver hits $26 an ounce, momentum saw an immediate 10% gain. And I do remember when some of that happened, and I remember talking about $26 being a critical number, and we got there. It took a while, but we did it. It came back up a third time to $26. Watch out. It blew your head off, he said. Okay, you go back to $35 again, and the price says, you better watch out. I'm at a triple top. And if I go to $36, it's a triple top breakout. Yes, indeed, that's Oliver. And I tell you, my call for silver this year is $36 an ounce. I think we'll at least touch it. But I tell you what, looking at his analysis, that's a pretty bold prediction if it gets there, because he thinks it could really climb what's at his 35. And he's not the only one. Others have been saying that as well. The only issue now is which week punches up there to that 10% over level. I think, who knows, it might even be tomorrow, but I think we'll soon get up there, Oliver said. And if you look back at a chart, you can see that silver really has done quite well over the last couple of months to a year. In fact, going back to 2022, it's been a pretty good steady decline, outpacing inflation. Yes, dare I say it, it's outpaced inflation, at least for the most part. And during that time, Oliver went on to examine the gold to silver ratio, which he said could be suggesting a breakout is overdue. Traditionally, the ratio falls between 40 and 80 to 1, but it is now closer to 100 to 1. I bet both of these metrics will pretty much coincide in terms of upturn, meaning not only a net price upturn in silver, but a relative performance upturn in silver versus gold. And I think that'll shock people more than anything, especially if all of a sudden silver wakes up in a shocking, rapid way. That's going to surprise most investors. I think it's about to happen. The technicals are ripe. And I guess you could use technicals, but you have to factor in the critical element to all this. Gold is treasured. Central banks are propping up most of gold's price right now. And anything else above that is just a bonus. But there is much more strong support for gold, I think, than silver at this point, precisely because of that. That's just my point of view on it. Addressing manipulation now, Sprott suggests silver has been manipulated for the last half a century. I look at silver as a market that's been manipulated for 50 years, with about 8 to 12 major international banks who are short over 500 million ounces of silver on the COMEX, have always been short that product, he said. They always make stabs at knocking it down, trying to cover, but the shorts go back up. However, Sprott said that if the price has gone from the $20 range to closer to $35, it has become more difficult for these banks to maintain their positions. The same thing is true in gold, but in gold, we all know that in the last year, when it broke through the $2,000 level for the fourth time, it was over for the commercial banks. He went on to discuss how trading on the COMEX seems contrary to what is going on in the other markets, saying that when the international markets are open, gold and silver prices trade higher. When the COMEX opens, they tend to fall. If you had just traded the COMEX and you bought silver at the starting value, it'd be worth about 2 to 3% of what it started at, whereas if you bought in the non-COMEX hours, it would be worth 600% more. That's a very interesting take on it. Wow. In his view, the suppression is obvious. However, he predicts that the gold to silver ratio will correct in the near future, and the silver price will start to outperform gold. Now, I've covered a topic about a very, very big sell-off that happened with silver, obviously a paper silver, with this and that, and it was the biggest sell-off that we'd seen in any given hour. And this is kind of related to that, so it's fascinating analysis by Eric Sprott. So, Sprott sees the price of silver going much higher. I'm sure we're going to be through $50. It used to trade at 15 to 1 the price of gold. Of course, that was when it was fixed and should not be used. In my view, that should never be used to gain what the price of silver should be, because that's when it was fixed. Mining ratio is anywhere between 7 to 1 and 9 to 1. That should never be used either. So I think he fundamentally made a flaw there, using that as a way to justify where silver's price is supposed to be. He said at today's price of gold, that would be over $200. I have no reason to think that we're not going there. Well, there's a reason to not think that based off of the 15 to 1 ratio, which was fixed. Oliver had a similar prediction. At first, the surge I could get you well above $50. I think you get up to 60s and 70s before you even pause. And I think it could rapidly go higher, he said. Oliver often explained that cryptocurrencies like Bitcoin aren't an alternative and appear more like a speculative bubble. Given the size of the U.S. debt, treasuries aren't as attractive to investors, which is causing further compression of monetary metals markets. Although Baker didn't provide a price prediction, he did express support for a market driven by supply and demand fundamentals, saying that this is a very, very, very unique time. Of course, I want to pause there because little language thing. I'm trying to do better at language and using the correct language. And a subscriber once pointed out to me some time ago that, because one time I said very unique. Well, unique is something that is, by definition, very. So it's a redundancy to say very unique. Either it's unique or it's not unique. There is no very unique or just sort of unique. It is unique. And it is a unique time. There's no question about that. And even though I may flub up and say the word very unique in the near future, I'm trying to be more aware of that. But nonetheless, so I disagree with them that it's going to get to $50. Of course, they didn't give a time frame, I don't think, as well as the first surge could get you to $50. I guess that's possible soon. Anything is possible. But there's so much working against silver, not only in terms of suppressive elements and manipulative elements, but in the natural market itself. And I think that is going to be prohibitive for silver reaching much, especially this year. I don't think we're going to see $50 this year. In fact, we may not even see 36 at this point. But hey, you never know. I'm still sticking with my prediction though. But I have been wrong and had much more calm or reasonable, I guess, predictions in the past, and I've only been right about it once. So there's that. But hey, I try to be as realistic as I can about the metal. But that's what the experts are saying now. They make some good points, but I do disagree with the price targets. And I don't know that we necessarily will get much of a breakout. I think at this point, we've seen the first breakout above $30. I think we're there. Second breakout above $36 or $35. We may see $36 to touch it, but I think it'll come right back down again. I don't think we're going to see it move much above that this year. Could be wrong, but we'll see. Not financial advice, obviously, but let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.